Okay, thank you for your patience as we've transitioned from talking about managerial accounting. We've talked about the basic costs like direct materials, direct labor, factory overhead, which equal the total cost of making a product. We talked about period costs. We talked about product costs. We talked about inventory, raw materials, work in process, finished goods. Those are all the foundational components for you to understand. And we're going to be talking about all of those kinds of costs throughout the next few weeks for the rest of the course, basically. Now that we've switched gears from managerial accounting basic concepts, now let's talk about a concept called job order costing. One of the last things we talked about in the last chapter was called just-in-time manufacturing. Just-in-time manufacturing takes into consideration the customer's order. We start the manufacturing process when we receive the customer's order. That is exactly what job order costing is all about. We track the cost based on the individual customer order. We call it a job order. So let's talk about these job order concepts. I'm going to talk about a couple of things here. There are two costing systems that we use in accounting. One is called process costing, and the other is called job costing. Job order costing is based on the specific customer's order. Customer says they want the car in blue. Customer says they want automatic transmission, power windows, power locks, and the customer also wants an enhanced radio with leather seats and a sunroof. That is very specific. That's a very specific vehicle that we're going to make. So therefore, it is a job order. Job orders typically are customized. There's a diverse set of products and services being offered. There's low production volume, meaning we only make a few of those types. High product flexibility, we can customize different parts. And there's low standardization. We upgrade things all the time. Okay? That's job order. Very specific. Very, very specific. Next week, we're going to talk about the other accounting system, which is called process costing. Process costing. Process costing is continuous manufacturing. It's repetitive, high volume production, low product flexibility, high standardization. The products are either the same or very similar in nature. An example of a process manufacturer would be an ice cream manufacturer like Breyers or Dryers or Ben & Jerry or whatever. Every time you go to the grocery store, you walk down the frozen aisle, you see ice cream, and it's always there, continuously. Why? Because they use what's called process manufacturing. They make it regardless of who's buying it. And it's all the same. It's all the same flavors, all the same product. Yeah. Other example would be a water bottle manufacturer. Okay. Water bottle manufacturer. They make millions of these a day, pretty much a week. Okay, millions. The same exact product. It's a plastic bottle. It has a plastic cap. It's full of water. It has a label on it, and then millions of them. They're identical. Identical. You know, that's process costing. We're going to jump into that next week. But I just want you to understand the difference between the two. So job order costing we're going to talk about today. Next week we'll talk about process costing. So since I started with the idea of an automobile and our examples, I'd like to follow that concept again. So here's the essence of job order costing, a very basic way. We receive an order from a customer, and this customer wants to buy a red SUV. Okay, great. Customer B15. Customer order comes in, and it's very specific. It says, I want an SUV. I want it to be red. I want a sunroof. I want leather seats. I want automatic transmission. I want automatic everything else. Okay, great. So the company has raw materials. We have the steel and aluminum for the frame. We have the engine components. We have the glass. We have the rubber for the tires, etc. Okay, our raw materials. The job order cost sheet, I have my raw materials and I have all the components listed out and how much of each thing I need. Okay, that's my direct materials. I requisition those raw materials, I put them into work in process. In work in process, I also have my employees on the assembly line. They're putting the car together. They're building the frame, they're putting the engine together, they're putting the rubber on the tires, they're putting the glass in, all that stuff. Work in process. These are my direct labor. And then, of course, I have factory overhead that I'm adding in as well. Include indirect materials like the oil, indirect labor like the supervisor's salary, and then other indirect costs. That's my bread. Because remember, when I manufacture a product, I have direct materials, direct labor, and factory overhead. That all goes into work in process. Then the car rolls off the assembly line. It becomes finished goods. Customer, look at the job order cost sheet. All the specs are lined up. There might be an inspection. Verify it. Put it into finished goods inventory. Put it on the parking lot. And then we deliver it to the customer. When we deliver the vehicle to the customer, it becomes cost of goods sold. You'll notice that we track each individual customer order using what we call a job order cost sheet, and we track the process. We track all the costs as it moves from raw materials to work in process to finished goods, and then eventually cost of goods sold. We add up all those costs using a job order cost sheet. I'll show you what it looks like, but I just want you to understand the physical flow. So, raw materials inventory. That's our raw materials, our direct and indirect materials. We have aluminum, the steel for the frame of the vehicle, rubber for the tires, the glass, all of the interior stuff, the engine components. These are all raw materials. We have them, our suppliers bring them in, they put them into a big yard, okay, or a big warehouse where I store all my raw materials. I have my assembly line. I receive a customer order. I give it a number. I requisition what I need to make the car from the warehouse. I bring what I need to make the car onto the assembly line, put them on my job order cost sheet. It becomes work in process inventory. The job order cost sheet tracks the amount of materials being used to make the car. We add in the direct materials, we add in the factory overhead, and then when the car is done, it becomes finished goods inventory. When we sell the car, it becomes cost of goods sold. We track the costs based off of the physical flow. Here is an example of that job order cost sheet. Under direct materials, of course, we'd have a lot more components than this, but this kind of shows you the direct materials that would be involved, direct labor, which tracks the amount of time that employees are spending on working on this particular job, and the factory overhead applied. Let's walk through this piece by piece. So, up at the top, of course, we have the customer information. We have the job order number. We have a couple of dates. Under direct materials, we have a listing of all the materials used for this particular job. In this example, we are making an alarm system for a specific vehicle. Yeah, that's custom. So the direct materials used are components for an alarm system, total $700 for the materials. I requisition them from my warehouse using a requisition form. That's what R46 is. Cost is $700. I track my employees' time using time tickets. They punch in. I record the amount of time that they spend working on this one particular job. Number of hours, yeah. Number of minutes in some cases. I track that with the vehicle. In this case, $1,000 worth of labor. It's the hourly wage of the employee times the amount of time that they spend working on the job. Okay, that's direct labor. And then I apply factory overhead. Factory overhead can be applied in a couple different ways. We have what's called the single wide plant method. Single plant wide rate method is what it's called. We have a couple of other methods such as activity-based costing and a couple of other overhead application methods. For this example, we're going to keep it simple and use what's called a single plant wide rate method. And what this is, it's an estimate that management applies to factor the cost of overhead. In this example, the single plant wide rate method is 160% of direct labor. So how do we find that? We take the direct labor for the job, in this case $1,000. We multiply that by 160%. 1.6. 1,000 times 0.1. 1,000 times 1.6 is 1,600. We add up total direct materials, total direct labor, total factory overhead to get the total cost of the job. In this example, $3,300. That's a job order cost sheet. It lays out all of the costs associated with that job. Direct materials, direct labor, and factory overhead. So, as I had shown you using the job order cost sheet, there's a couple of things that need to happen. The first thing is we need to purchase raw materials. We do that by purchasing them from our distributors. They bring those to the company. We put them in the warehouse. We record all of the purchases and receipts using what we call material ledger cards. Okay. They help track the inventory for raw materials. Material ledger cards track the inventory for raw materials. We classify those based off of what those raw materials are. In our alarm system example, we have alarm systems, speakers, paint, etc. Okay. Once we receive a job order, for that job, we fill out what's called a requisition form. That requisition form goes to the raw materials department, who sends us the raw materials we need for that particular job. Those materials used for that job get tracked on the job order cost sheet under materials. Now, of course, we have the labor for the employees working on the job, and then the overhead, just like I showed you on the job order cost sheet. We also track indirect materials. They include things like smaller components that we cannot easily trace, remember? And so we do the same process. We fill out requisitions for the use of those indirect materials. Those indirect materials go onto factory overhead. This is an example of a materials ledger card. We purchase our raw materials from our distributors, so we receive them, putting it into inventory, raw materials inventory for that particular unit. When the manufacturing department fills out a requisition form, we issue those raw materials to the manufacturing department. Take them out of raw materials inventory. So here we have an example. We debit raw materials inventory when we purchase raw materials inventory, and we credit accounts payable because we ordered them on account. If we purchase them with cash, we would credit cash. So that's us purchasing raw materials. We have an employee that filled out the materials requisition form because they're working on a couple of jobs, so they need the raw materials to complete those jobs. Those requisition forms get handed to the raw materials department, and then they issue those raw materials to work in process. So we debit work in process inventory to increase our work in process inventory, and we credit raw materials inventory to decrease raw materials. For labor, as I showed you on the job order cost sheet, we track the amount of time each employee works on each job. And the way we do that is through what we call time tickets. The employee records the time that they started working on the job and the time that they stopped. We multiply that total amount of time times their hourly wage. We apply that cost to the job order cost sheet using those time tickets. For indirect labor, it's their salaries, it goes to factory overhead. Here's an example of a time ticket. We have the employee's name, the employee's number, the job number, start time and end time for every time that they worked on that job. Yep. Hourly rate times the amount of time spent equals total amount. We add it up for each day worked on that job. Yep. We do that for every single employee. In order to add the cost of direct labor, work in process, we debit work in process inventory, and we credit factory wages payable. We have to pay our employees eventually. But what this does is it adds the total cost of that direct labor to work in process inventory. And then, of course, we have factory overhead for each job. I had mentioned that in our example, our first example, we use what's called a single plant-wide rate method. This is also known as a predetermined overhead rate method. Okay. So here's how we do this. Number one is management decides on a predetermined rate, overhead rate. To do that, we take the total estimated overhead costs divided by the estimated activity. Example. Total estimated overhead costs for the year is 1.2 million. Divide that by estimated activity, number of hours worked, or total number of labor hours, we'll say, is the estimated activity. That gives us the predetermined overhead rate. The second part of applying overhead costs is to apply the estimated overhead. We do that by taking the overhead rate that we got from step one, we multiply that by the actual amount of activity base used. In our earlier example, total number of hours used on the job. Step three is we record the actual overhead at the end of the accounting period. Then we reconcile that with our estimate, close out our overhead amount. If the actual overhead comes in greater than the estimate, that means we've underapplied factory overhead. If the actual amount comes in less than the estimate, then we've overapplied factory overhead. We make adjusting entries at the end. That's the overall basics of it. I'm going to get a little bit deeper just so you understand how it works. In our example, we use a single plant-wide rate method, also known as a predetermined overhead rate. We take the estimated overhead cost for the year divided by the estimated activity base for the year. In this example, we have $200,000 of estimated overhead cost for the year divided by 125,000 of labor dollars, labor cost for the year. That gets us to 160%. That's how we found that rate. I take the actual amount of time, or actual direct labor cost times the predetermined overhead rate to find the applied overhead. I debit work in process inventory to increase work in process by the overhead amount, and I credit factory overhead. Now, when the actual amounts come in, I need to reconcile. I need to record the actual overhead for indirect materials, indirect labor, and other overhead costs. And to do that, I debit factory overhead and credit raw materials inventory. What it does is it adjusts for indirect materials used. For wages, I debit factory overhead and credit factory wages payable to record indirect labor used. And then The other amounts, I debit, factory overhead, and I credit things like depreciation expense, rent payable, utilities payable, and prepaid insurance, etc. Those are the adjusting entries I make. And of course, just as before, we want to follow our costs. We base off the physical flow. Yeah, moving from raw materials into work in process, out of work in process, into finished goods, and then eventually cost of goods sold. Shows you the physical flow. So we can see exactly the physical flow of those costs, right? Materials purchased, and then of course materials being used, wages incurred as for direct labor, and of course factory overhead application, etc. Shows us the physical flow. This is a summary of all of those entries that we just talked about based off of the physical flow. And just as we talked about before, this is the schedule of the cost of goods manufactured. Take direct materials used plus direct labor plus factory overhead to get total manufacturing costs, plus beginning work in process inventory equals total cost of work in process minus ending balance work in process inventory equals cost of goods manufactured. And of course, the effects on the income statement and balance sheet. Your balance sheet's going to have raw materials, work in process, and finished goods inventories. Your income statement's going to have cost of goods sold, selling and administrative expenses. And earlier I'd mentioned when the actual overhead comes in, we need to determine whether it's over applied or under applied. So we need to make adjusting entries, right? If the actual overhead is greater than the applied overhead, that means it's under applied. The opposite is also true. So we make adjusting entries for those. And this is an example of that kind of adjusting entry that we would make. Follow the physical flow. I promise it'll help you in understanding cost. We can apply the same concepts to service businesses. And this is we did before. We have direct labor, and we have factory overhead for service businesses as well. The other thing we might be missing is direct materials to some degree. And this is one ratio that is very important to service businesses. It's called the gross profit ratio. It tells us for every dollar sold, what would be applied to profit. Yeah. We take service revenue minus the cost of services divided by service revenue. That gives us the gross profit ratio. It's very similar to the way it works in a retail business. I know that we talked about gross profit in Principles of Accounting 1. So, my friends, we made it to the end of our discussion today on job order costing. Are there any questions that you have about job order costing? Any questions at all? Be anything. Liz, are you okay? I see a thumbs down. Are you
No questions is what I meant.
Oh, okay. Right. All right, I got you. All right, thank you, Danielle. Okay. Very good, very good. Hopefully this was a very helpful lesson. Hopefully this was very useful for you. things that you can take away from this, of course, is remember as you are studying cost, I want you to think about the physical flow of the materials as it goes through the manufacturing process. Think about that manufacturing process. It starts as raw materials, goes into work in process, goes into the finished goods, and then eventually cost of goods sold when we sell it. Costs are tracked at every single stage of that process. Okay? So think about that as you're working through your quizzes and any type of questions that you think of. So just a recap of what you should be doing this coming Thursday during class time is 4 things you need to do for this week. Under Engage and Explore for this week, you have a hypothesis. This is very straightforward. I don't know if you've ever had the opportunity to engage in a hypothesis, but let me show you what it looks like. You'll click on it, you'll open up the hypothesis, it'll start a video. And the way it works, and I see Christy's already actively in there, is that you'll highlight an area and you'll create an annotation. It could be something like what Christy has here, a sentence or two, maybe it's a couple of questions, etc. That is what we call an annotation. So I want you to do 2 things with this hypothesis. Create one original annotation, just like what Christy has here. And then I also want you to respond to one of your classmates with a question or comment about their annotation. Okay. It's similar to a discussion board. It's just a little bit more fun, I think. I think this is more fun than a regular discussion board. So that's action item number 1. Action item number 2 is a discussion board. Here we have a discussion board. 2 parts. One is an original post answering the 3 questions. The second part is respond to a classmate. Okay, the constructive response. I've outlined what you need to do here to make it nice and straightforward for you. So that's action item number 2 is the discussion forum. So number 1, hypothesis. Number 2, the discussion forum. Then, of course, we have 2 quizzes. One for chapter 18, which was managerial accounting, previous discussion. And chapter 19, quiz on job order costing. Just before each quiz has 2 attempts, we take the highest attempt into the gradebook. Okay. Are there any comments, questions, or concerns about what needs to be done for this week? We're good. Okay, awesome. As always, if you ever have any comments, questions, or concerns, you can email me, call me, set up office hours, whatever you need, I'm here for you, okay? Thank you all so very much for your time today. I really do appreciate every single one of you being here. I sincerely appreciate the effort you're putting into this course so far. I know that it's a lot of work. Remember, it's only an 8-week course, and we're already in the 2nd week. So stay on top of it. Keep up the momentum. Keep working. I know it's a lot, but I want you to keep working, and I promise you'll do okay. Right? Thank you all so much for your time today. I sincerely appreciate all of you. Have a wonderful rest of your night. Thank you so much. Take care. Bye-bye.
Thank you.
Thank you, Dr. B.
Have a nice